Okay, welcome back. Please, before I forget, okay, others have not joined. Mrs. Shem,
Yes, sir, they
before I
have not
forget, I want
joined.
to make a suggestion before others join. You see, I don't know if it will be possible for us to do, okay, let others join so that I'll just make the announcements once so that I'll get your opinion, whether you are okay with it or not. Mrs. Angela, welcome. Now, what I was saying is this. I think it will be better for us to subscribe to Zoom so that we can have just one single class instead of all these uh, three classes. You understand? And the Zoom, the pay Zoom is I think was it $20? Between 20 to 15 to $20 every month. $15 to $20 every month. I don't know if it what the phone Abby, including myself. If it is what if it is what the four of us can be contributing on a monthly basis for the duration of this class, so that we can have just one extended class instead of having a break within the classes. So that will be around $5 each monthly. That's the suggestion I want to bring in. If it is welcome, if it is not, then we continue with this. $5 is around 2K. At if we use 500 as exchange rate,
Per
if you
month.
eh,
Per month.
yeah, per month. So you people can discuss this among yourself and give me
Mm,
feedback later.
okay.
Hmm?
Okay,
You
that
can
will be better. Talk
uh, dis-
among.
discuss it and give me the feedback, whatever you have decided on it. So
Thank
let us
you.
continue. Let us continue. Okay. I've not shared my screen, Abby. Oh, I've shared now. Shared. I believe you can see my screen, Abby. Can you see my screen?
Yes, sir, we can see your screen.
Mrs. Chiwe has not joined. I don't know what is happening. What happened? Why should she not join? So this is the formula I need to unjail. This is the formula I need to unjail. This is the formula I need to unjail. Okay, I think we have that there. Now, we already know our beta of equity to be 2.4 for the proxy. What's the market value of equity? Now let's look at the gearing for the proxy. What's the gearing? The gearing is 30%. I mean, 30% debt over debt plus equity by market value. Now, let me quickly explain this. If you are computing gearing, gearing can be computed in two ways. Gearing can be computed in two ways. If a question asks you to compute gearing, you can say your gearing is debt all over equity. True or false? This one way of computing gearing. Another way is to say gearing is debt over equity plus debt. These are the two formulas for computing gearing. Now, how do you interpret these two formulas? Very important. Always know that the denominator, the denominator, denominator must sum up, to what? 100%. Okay, that's the note. Note the denominator of the two formula the denominator of the two formula must sum up to what? To 100%. If I'm using the first formula where I have equity, it must be 100%. If I'm using the second formula where I have equity plus debt, it must also be what? 100%. Now, look at what this question gave me for my journey. The question for this question, I'm referring to this question we are solving now. My journey is given as debt over debt plus equity. Can you see? You can see that's what the question tells us, Abi. He said journey debt over debt plus equity of 30%. That is the kind of journey this question gave to me. Debt over debt plus equity. And I've already told you that the denominator must sum up to what? 100, right? Now, where you have debt, the interpretation of this is that my journey here is the first thing, the first figure mentioned, that 30% represent your debt. Please take note. The first figure represents your debt. So my debt is 30% all over. The denominator must be 100. So 100 minus 30 will be what? 70. So debt is 30 here, and equity is what? Equity is 70. This is what the question gave to you. Therefore, I can say that my market value of equity is what? Is 70. While my market value of debt is what? Is 30. This is how to interpret it. But if it is the first formula here, debt equity, then it means my debt will be 30, my equity will be what? 100. Now, the examiner will let you know which one to use. The examiner will let you know which one to use. And look, like this one, you can see it's clear. Debt over debt plus equity. So the examiner will give you direction as to the type of gearing you are dealing with. Okay. What's our tax rate? Tax rate is 35%. Therefore, beta of asset is equal to 2.4 times 70 all over 70 plus 30 into bracket 1 minus 0.35. Okay, beta of asset will be equal to 2.4 times 70. 2.4 times 70 give us what? Oh yeah, pick your calculator and give me the figure. 2.4 times
168.
168. 168 all over 70 plus 30 plus 30 into bracket 0.65. So beta of asset is equal to 168 all over 30 times 0.65. 30 times 0.65. That's 19.5. 19.5 plus 70, 89.5. 89.5. So divide. Beta of asset will be equal to 168. 168 divided by 89.5. That's 1.88. That is the beta of asset. That's the business risk that PPT will be facing in that industry. So, because PPT is having debt, Then I need to reject this beta of asset. Reject the beta of asset using PPT gearing. What's PPT gearing? We go back to PPT information. We are given the debts. The gearing is debt to debt plus equity as well, and it's 40%. So how do I reject? What's the formula? Let me go and bring down the formula for the gearing. I want to reject. Okay, I didn't show the formula, did I? Did I show the formula? No. Okay. Okay, this is the formula to reject. Let me just copy it down. Okay. So we now have beta of asset to 1.88. No beta of debt. What's the market value of debt? Market value of debt is 40 for what is given to us there, and market value of equity is 60. Market value of equity is 60. If this is the case, can I say our tax rate is made the same? Don't forget, tax is still 35%. Tax is 35%. So beta of equity is equal to 1.88 plus 1.88 minus 0 times value of debt 40 into bracket 1 minus 0.35 all over equity 60. It's as simple as this one. Simple. So beta of equity will be
Why
equal
did you
to.
say 60? I can't find it in the question.
You said?
The value of debt and equity, the 40 and 60.
Go back to the first paragraph, the starting point of the question on page 30. PPT has a pre-tax cost of debt of 3% and gearing debt over debt plus equity of 40%. Can you see it?
I've seen it.
Okay, let's continue. Plus 1.88 times 40 into bracket 0.65 all over 60. So beta of equity is equal to 1.88 plus 1.88. They will now say times 40 times 0.65. 40 times 0.65 divided by 60. 0.43. 0.43. So beta of equity is equal to 1.88 plus, okay, let me do it just once, 0.43, 0.43 times 1.88 plus 1.88, 2.69, 2.69. That's our beta of equity. So we have to compute cost of equity. Of equity using CAPM. So cost of equity is equal to risk-free rate plus beta of equity market return minus risk-free. Cost of equity will be equal to, what's our risk-free rate? 1%. Beta of equity 2.69, 1.69, sorry, 2.69 into bracket. We are given premium, Abi. Market risk premium of 4%. We are given premium of 4%. So multiply. cost of equity should be equal to 2.69 times 4. 2.69 times 4 plus 1, 11.76%. 11.76%. That is our cost of equity. Now we go and compute cost of debt. The question has given us cost of debt. You can see pre-tax, pre-tax cost of debt of 3%. So my post-tax, let me put it as post-tax. Post-tax cost of debt. The post-tax cost of debt is going to be cost of debt is equal to the 3% pre-tax adjusted for tax, 1 minus 0.35. So that will be equal to 3 times 0.65. 3 times 0.65, 1.95%. That is the cost of debt. We can now go ahead and compute our WACC. I think I have formula for WACC up there, Abby. Let me just speak it straight. Okay. I will share this sheet with you after we have finished cost of capital. You understand? That's the issue we have not shared. After we have solved all the questions on cost of capital, I will share the sheet with you. So, compute WACC. Compute WACC. So, WACC is equal to cost of equity, 11.76% times 60 all over 100 plus 1.95% times 40 over 100. So our WACC will be equal to, let's do that, 11.76 times 60 divided by 100. That's 7.1%. 7.1% plus 1.95 times 40 divided by 100 is 0.78. So WACC is equal to 7.1 plus 0.78. That's 7.88%. This is the WACC. So this is the WACC that PPT supposed to use or to be using for the computation, for the evaluation of investment project, not 10%. Not 10%. Any question on this? Any question on this, please?
No question.
Eh?
No question, sir.
No question, Abby? Now, if there's no question, let's go. I've told you, go and solve B. Go and look at, not solve per se, because they are theory and we have discussed it earlier. C, I put it C, explanation on cost of equity using CAPM treated earlier. You get this there. Please go and revise this. You see this one there. So C. Advise PPT on the benefit and drawback of using the WACC calculated in Part A above as part of the discount rate for investment appraiser. Okay, what is the advice? Advice on the use of the WACC computed above. Now, lest I forget, we are going to hold a class on Wednesday. Take note, Wednesday 9 to 11 a.m. by God's grace. Okay? Are we there?
Okay. No, I didn't hear you, sir.
On Wednesday 9 to 11 a.m. we are going to hold a class.
Wednesday.
Okay? Hello?
Hello, sir.
Did you understand? That's next tomorrow. You know there's holiday tomorrow. There's no holiday on Wednesday. So that Wednesday public holiday, we are going to hold our class 9 to 11 a.m. By God's grace. May God spare our lives.
Amen.
So C. The benefit of the WACC computed here is the fact that it will enable PPT to make appropriate investment decision. What do I say here? Before, PPT was using 10% as discount rate. If the discount rate is too high, it means PPT, even we have even seen that it was too high because the WACC was supposed to be 7.88, but it was 10% before. So PPT will have been rejecting projects that are profitable because if you discount your cash flow using a higher than usual discount rate, the present value of the cash flow will be what? Will be lower. So the new cost of capital that we have computed here will enable PPT to make an appropriate investment decision. Unlike the previous one, where a better investment, a profitable investment will have been rejected because it will have been interpreted to be what? To be generating a negative net present value because of the higher discount rate used as the discount rate. The drawback of this cost of capital that we have computed is that it cannot be used if PPT is to appraise investment in another industry. So if PPT want to go into another industry to establish an investment, we cannot use this word. We cannot use this WACC because this WACC is current WACC. And when you are going into another industry to establish or to undertake an investment, you need a project-specific WACC. So that is the drawback of this WACC that we have computed. So let me put it down. The WACC of 7.88% computed for PPT is lower than the initial WACC of 10%. Hence, PPT will be able to make an appropriate investment decision using this WACC this work computed using the CAPM. The drawback of this work is that it can only be used if PPT is evaluating an investment in the current industry, where PPT is diversifying, then a more appropriate work, project specific work will need to be computed for such investment projects. That's all. That's the benefit and drawback. So, any question before we call it a day? On Thursday, by God's grace, I've told you I'm not going to do 12 for you, Abby. On the Wednesday, we're going straight to question 14. But I will solve question 12 and forward to you. 14, 15, 16, 17, 18. I cannot skip any of these questions because the remaining questions are potential examination questions. Okay, they are potential examination questions. So I have to solve them with you so that you understand. In case you come across them in the exam, you should be able to tackle them. So do we have any question before we call it a day? Question, please. Question. Any question? Please let me know whether you have question or not. If there is no question, then we call it a day.
No
Mrs.
question.
Angela, any question? Mrs. Sheung, any question?
No question, sir. For now.
All right. Please, as we are doing this, I urge you, make sure you go through them. As you are solving it here, I expect you to be solving it in your note as well. Is that what you are doing?
Exactly.
Okay, where about Mrs. Angela? I will do the same. Mrs. Angela, you are no longer on the platform, it's only your name that is there.
Yes, sir.
That's what you are doing, Abby?
Yes, sir.
Great. So that's brilliant. Please ensure you go over them. Don't pile up your notes. Revise immediately so that you'll be able to understand and you know your area of weakness so that you can tackle it immediately. Always chat me up when you encounter any difficulty, please. So do have a wonderful night rest. We meet on Wednesday by God's grace. Bye.
Mission. Angela.
Ọ na-akpọ onye ọbụla, naanị m ha